You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible?
75 basis point increase is not something the committee is actively considering.
We need to see the labor force participation rate pick up on Friday, and we need to see CPI next Wednesday come in below expectations. It's been a long time since that happened. Now listen, CPI expectations for next week are 8.2%. And if that comes in at that level or higher, I think you can expect Jim Bullard to go back on his nationwide tour, despite what Jay Powell said. This is a Fed that can and will pivot. So really, to confirm this rally, you need to see that inflation has peaked, which I believe it has, for a lot of reasons that may be esoteric economic reasons, inventory to sales, prices paid, those sorts of things in the regional Fed surveys, but they matter. And I think inflation has peaked, but I got to wait till Wednesday to really confirm it and put these little gems on.
Yeah, okay. You're not ready to go full Top Gun Tom Cruise just yet, for those who are not on Twitter, and not everybody's on Twitter.
From the moment those words left the chairman's mouth, the major averages were off to the races, rallying nearly 3% across the board. S&P 500 posting its best day since May 2020. Now, I'm going to ask to pause here, because before we get to the man who asked the chairman to speak those market-moving words, I'm going to come right here to our desk first and ask you guys this question. Based on what he said, do you think 75 basis points is off the table? Raise your hands. No one.
Yeah.
It's still on the table. Okay.
Still in my hands.
Let's get to senior economics reporter Steve Leisman. Interesting how the markets respond and how the traders actually, process his words. Steve.
Yes, it's interesting. The Fed and the Fed Chair Powell delivered what they were expected to deliver, 50 basis point rate hike today, a plan to slash the balance sheet, $95 billion. But Powell threw the market a bone, and the market went scurrying. Take a look at the big change. You want to look at the equity market? I'm looking at Fed probabilities here. Before this meeting, there was a 51% chance probability, according to Refinitiv, of a 75 basis point rate hike at one of the meetings. May was existent back then, June and July. After Powell, it is now down to 7%. I don't know if you have 0.7% of a person there who can vouch for that, Melissa. But here's the whole spectrum of where the Fed futures market is priced now. Down 10, 15 basis points on each. So still very aggressive here for sure, but not necessarily as aggressive as it had been. Look, you have to remember this, Melissa. Powell, instead of saying, hey, we're not going 75, he replaced that with, we're doing 250. So that's a pretty big deal here for the next couple meetings here. The Fed's going to neutral. It considers neutral 2.25%, 2.5%. It's a freight train on the way to neutral. I don't think anything is going to stop it. But what he did say, instead of the market reading where the market is priced, are you at 330, 340, 350? He said, we're going to stop, look around at neutral, probably go at least somewhat above it, but he's not playing the game. And I want to just quote my friend Paul McCulley, who says, a smart forecaster never forecasts around two turns. He told you what the forecast was for the first turn. He's not playing the game of the second turn.
Neutral, Steve, do we have a good idea of what they mean by neutral?
It's a good question, and had I not needed to ask that one question, it was the second question on my list, which is, Mr. Chairman, sir, where is neutral, and what do you think about neutral now? I didn't get a chance to ask that. I was trying to get a feel, as you remember from my follow-up, which tell me why it's going to be 25, 50, or 75 one month and one meeting or another. And actually, we have a reason to ask that because we've got the jobs number coming up. So if the jobs number comes in with a higher unemployment rate or a lower unemployment rate, do I then think for sure it's a 50, or is it somehow possible to go to 25? He took 75 off the table, and he said 50 is just fine. I think, I'll throw this out to my friends there on the panel. We've had a kind of decline in this notion of the Fed put, but I think we learned today there's not necessarily a Fed call out there. Powell doesn't seem to have any particular interest in driving the market lower if he doesn't have to. So he threw the market, I think, an important bone. I didn't realize how much the market needed that 75 to get off the table to find his feet. But I don't think Powell said, he doesn't need to drive the market down necessarily, but he's certainly not going to be in there supporting it if it falls again.
Unless, of course, you think that all the action today or most of the action was driven by algos, because most participants or many participants still believe that it could be on the table at some later date. Dan, that was your take. We were talking
But
about
Melissa,
that.
are there still actual participants? Isn't it all just algos anyway? Nobody's actually trading. This
We're
is all
here,
computers.
Steve. We're here. We're still here, man. They can't get rid of us. I mean, here's the deal, though, Steve. You know, when you think about, there was a lot of talk about the stock market, and you just said throwing the market a bone. I mean, when you think about how the market sold off now from that second day of the year, from an all-time high, the S&P 500 sold down 15% in front of the first 25 basis point hike that we got there. So they sold the rumor. They bought the news. We had that big rip. I think all of us were like, it wasn't good. If they had said 75 might be on the table, I don't know what the market would have done. And actually, the market might have rallied too, because maybe hitting it hard, like out of the gate, might have been good too. I don't know.
Yes, it's so interesting to say, if you told me what he was going to say before this,
right,
and said, make money on this, right? The only way to make money would be to sell the information, because it wouldn't surprise me if another take on this whole thing would have been, wow, they're behind the eight ball here. Why would they take that off the table? What does that get him? And I don't see it as that it is off the table. It's sort of, to me, like hidden in that is data dependent, right?
Yeah.
You get a couple of hot numbers, and I think 75 should be back on the table.
Which, by the way, is not a departure from what he has said and what he continues to say. And yet the markets really, I mean, took that bone, Steve, and ran with it. So, Bono, what was your take here?
It's like, why paint yourself into a corner? Like,
yes,
you need to maintain maximum flexibility right now. We've all said, listen, we're behind the curve on here. We might need to accelerate this thing. I don't understand why you would even indicate in the slightest fashion that no bets are off the table, right? And so for me, I don't think that it was off the table. He said it's not immediate. It's not in the immediacy of what we're planning to do. That if that is not a walk around to answering a question, I don't know what it is. I can understand that you don't want to spook the markets, but I don't think the difference of 25 basis points is the difference between us being flat or us being up 2.5%, 3%. It didn't make sense to me.
Yeah, and everything we're talking about is the risk to this rally. So what we've seen over the last several months is you get these days, you're up 3%, you come in tomorrow and you're down 3%. So the risk here is tomorrow the market wakes up and says, hey, wait a second, the Fed's still behind the curve, and they're not even going to catch up. They really needed that 75 basis points. So I think you have to wait and see how this works. Today's rally made sense to me in only one way, in that there was a 51% chance of a 75 bip hike in June. If you were short and you were valuing stocks on that, then you had to cover, because now that probability came down. So that's new information. I don't necessarily think that's sustainable, but we'll find out over the next couple days.
Nor is that information then to be long or go longer then. It's
I don't
to
think
cover
so.
Your short.
Exactly.
Not necessarily information to be long. Steve, did he answer directly, and forgive me if he did and I missed it because I was sort of in transit, but did he answer directly how far he is willing to go, in terms of sticking by that 50 if he sees financial conditions really tightening and maybe the economy going towards recession in any way?
He did and he didn't. And I do want to respond to Bonawyn, which is this notion of, well, why take it off the table? I think it's fair to recall that the Fed is asking the market to digest an awful lot here. Something that's never happened before. We haven't done a 50 in 22 years. We've never done $95 billion of balance sheet reduction over a period of time here. I think what Powell is saying to you is, and by the way, he's also pulled forward a whole lot of rate increases here into the future. I don't think he needs 75 to do it right now because of how much the market has already priced in. So in answer to Melissa's question, he told you he's going to neutral, probably a little bit above neutral. He's not forecasting how much above. Remember, he said, look, it may be that inflation has peaked and we don't know it yet. So he's reserving the flexibility to go either way. He may have to go where at the worst possible outcome here, but he's just not forecasting it because, frankly, he doesn't know.
Steve, it's Karen. Let me ask you something Melissa touched on, which is, what is neutral? Is this the new neutral? I sort of thought 2.5-ish was the old neutral with a different inflationary environment than the one that we're in now. So I was wondering, is it 3? What is it?
The Fed is forecasting 2.25 and 2.5. There's some notion on a short-term basis, neutral may be higher. And then the real question you want to ask because it's a little bit more answerable than your other question, is why I'm going there, is what rate is needed to really slow the economy down. It is someplace above that. It may be 3, it may be 3.5%. Certainly when you look at that chart I put up earlier of where the market's headed, it's headed to 330. That's what it thinks is where the Fed needs to go right now in terms of bringing down the inflation rate.
Steve, it's always great to see you. Thank you.
Pleasure.
And what an amazing question, Steve, really. You sent the global markets rallying there. This is all, of course, in the hope of killing inflation, right? Check out, though, this chart of diesel fuel hitting another record high, up more than 75% compared to a year ago. BK here says this is one of the reasons the Fed is going to struggle to get inflation under control. What is diesel telling you?
Yeah, well, listen, I mean, we're seeing diesel prices almost double this year. And you're seeing diesel supplies, which we got today at 10:30, below the 5-year average, significantly below, I think almost 20% below. So what's happening here is refiners are out there and they're saying, hey, we got to make some more diesel so we can keep these trucks rolling. But they're pulling that oil that they otherwise would have put into gasoline for the summer driving season. So you have these two kind of things going on where prices are going to stay higher in all energy classes. And there's nothing that the Fed can do about that. That's a supply side issue. So you may want to raise rates. You could raise rates to 5%, and it may not impact this at all. So in my view, this is why I think the Fed is probably going to raise a lot more than what people think. And inflation is going to be a heck of a lot stickier than anybody thinks, or at least that the market is pricing in.
Right. The Fed can only address demand side, right, of the equation, not the supply side. And in fact, a lot of the inflation that we're seeing right now is supply side inflation. So that is the pickle that the Fed is in.
Right. And so, Steve just said it. The last time the Fed raised 50 basis points was May of 2000. And they did not know at the time that they were basically going to hike into a recession. They thought the economy was pretty good. They were trying to tamp down an asset bubble at the time. And when you think about that, Fed funds was at 6.5% in 2000, and it went down to 1.5% at the lows in that .com crash period. And then in 07, we were at 5.25%. They brought it to 0 during the financial crisis. So here we are. We got back to 2.5% in 2019. Okay, we have a black swan event. They bring it to 0. Fine. They screwed up. We all agree that they just kept on going. And then we had we have this asset bubble plus inflation. And now they might have a weakening economy. And so to me, if you think that the S&P 500 down 15% and what we just saw this year encapsulates everything that we just talked about, you think that's it? No way. I mean, it's just not going to happen. So to me, the last two times we saw this, the S&P got cut in half. It went down 50% in both instances. Tell me why I'm wrong. It won't do 30. I don't know.
I think Steve makes some good points. I mean, taking or at least framing 75 in a way that is a bit more conciliatory to the market. You got to keep in mind, I think people have a hard time shifting out of this QE situation that we've been in for the better part of 2 decades. Now we're raising rates. We've come out of this accommodative situation with COVID, et cetera. I mean, he makes a point. Why send additional shockwaves to the market? All I'm saying is, given where we are here and now, being that most of the tools are not going to address the issues that we're seeing, the wage, well, it's somewhat wages, but the supply situation that's really leading to a lot of inflationary pressure, the commodity situation that's leading to a lot of commodity pressure, why send additional shockwaves? I'm willing to kind of think on that. My line of reasoning is, given that we need to attack this and we're behind the 8 ball, why would you put anything out there that refrains you from doing everything necessary or possible to attack this and nip this in the bud? That was
Don't take anything off the table, basically.
Exactly.
Yeah.
Right.
Yeah.
And maybe he doesn't think he did. Maybe he's like,
I don't think
dependent.
I don't think he did. I don't think anybody at this table thought he did today, actually.
Right.
Even though
Just the market reacted as if he did, but I don't feel that he did.
But that's a really good point, because remember what the Fed's been doing is they have been a tremendous job with the communication channel. So let's watch over the next couple days when these Fed governors come out and start saying, hey, wait a second, maybe 75 bips is back on. Then we'll see if this rally has legs. If it doesn't hold then I'm with Dan.
I have a question to ask here about today's rally, because we saw everything across the board rally, right? Broad-based rally, every single sector on the S&P 500 up 3% and more. Commodities also rallied across the board. If you believe the Fed, and if you believe that the Fed can engineer some sort of soft landing and tame inflation, should commodities also rally, BK?
should commodities absolutely. I mean, well, you had two things going on today. You had a weaker dollar, right? But the commodity story isn't necessarily a demand story. It's the supply story. So
the Fed can't control
it. And also remember, China's closed right now. So all that commodity demand is not even out there, and commodity prices are at this level. So I think we've got an issue coming into the spring, coming into the summer.
All right, coming up, we've got some earnings coming your way. Shares of Booking Holdings, TripAdvisor, and Etsy on the move after reporting. We'll bring you all the numbers next. Plus, we've got more on today's rally on the back of the Fed's rate hike. What is next for the markets as the central bank battles inflation? The details ahead. Do not go anywhere. Fast Money's back in 2.
I'm only 21, but I've never been afraid of hard work. I waited tables to help my family make ends meet. I dreamed of going to college, and the KPMG Future Leaders program helped me get there. With a scholarship, mentorship, and support, I graduated with degrees in biology and philosophy. Now I'm on my way to become a doctor, and I'm just getting started.
The KPMG Future Leaders program, empowering young women to reach their potential since 2016.
You'll always remember buying your first car. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. At T. Rowe Price, our strategic investing approach can help you build the future you imagine.
Verizon is going ultra. With 5G ultra wideband in many more cities, you get up to 10 times the speed at no extra cost. Plus, 6 premium entertainment subscriptions included, like Disney Plus, music, gaming, and more.
Delightful.
Saving you over $350 a year. And for a limited time, get a 5G phone on us. No trade-in required.
Amazing.
This is the offer you just can't miss. Verizon is going ultra, so you can get more.
Join the CNBC Fantasy Stock Challenge and get $100K in virtual bucks to play the game. Create your virtual portfolio, track your progress, trade to win, and play for free. Go to cnbc.com/stockdraftchallenge now.
Hi, folks. Medicare Part C plans with extra benefits like getting money added back to your Social Security check may now be available to you in your zip code. Make sure you're not missing out. It's simple. 1, call the number on your screen. 2, they'll look up your zip code and see if you're eligible. 3, they'll check for plans with extra benefits like prescriptions, dental coverage, and the benefit that adds money back to your Social Security check every single month. Call now.
I called to get everything I deserve.
I called to check my zip code for a plan with a benefit that adds money back to my Social Security check.
I called to check my zip code.
Millions of people have called the Medicare Coverage Helpline. Call, check your zip code, see if you're eligible, and get what you deserve. Call now.
Call 1-800-548-2837. That's 1-800-548-2837 now.
Welcome back to Fast Money. We've got an earnings alert on Etsy, the online retailer, meeting earnings estimates, but the stock's sinking on disappointing guidance. The conference call got underway at 5 p.m. Christina Partsinevelos is here with the very latest. Christina.
Melissa, with consumer spending pinched by inflation, retailers like Etsy are starting to take note. Etsy's CFO, I should say, warning, quote, consumers have less disposable income and many more places to spend it, but did reassure investors these are short-term headwinds. The market is reacting, like you said, to the weak guidance for Q2 despite higher seller fees. And we also have disappointing levels of active sellers and buyers. Both metrics came in lower than estimated. And keep in mind, about half of Etsy's active buyers still only make one purchase a year. And Etsy also said, quote, they are nowhere near saturation as the majority of their active buyers are still in the United States. There was an interesting tidbit on this conference call that's going on right now. Etsy claims 10% of adult men in the United States and UK shopped on Etsy at least once in the past 12 months. Not sure about our panel, though.
We'll ask. Christina, thank you. Christina Partsinevelis. Now, BK, I know you've gone on there to buy a crocheted apron a couple times.
That's right, absolutely.
But it's very interesting to hear with this guidance and how it's framed. You know, they said in a world in which there are many more choices, Christina mentioned consumer having less disposable income, which is a little bit surprising because you think the consumer is in such good shape, can spend, and we're hearing from them that there's less disposable income.
Yeah, and so we've heard it from a couple other companies as well. So this is not necessarily that shocking. I mean, when you think about the product that Etsy sells, it is purely discretionary. I mean, nobody needs a macrame shirt or a macrame apron or even...
Some people might.
Some people, I did. Well, Dan got me a really nice macrame pot holder.
Yeah, I did.
Yeah, it was very nice. Thank you. But you don't need it, so that's the point. So with Etsy, though, I think this tells you that the edge state of the consumer is weak, and it's not as strong as maybe the market priced in today.
So a couple things I think the consumer, that's clearly one, although I don't know if that's Etsy pointing to it when maybe it was a little more Etsy. Remember what a beneficiary Etsy was of the pandemic.
Mm-hmm. Homemade masks
were huge,
sell.
but people wanted things for their homes. I need pot holders.
Macrame ones.
Exactly. Yes. So there's that. And now the stocks come in a lot. The PE is a lot lower for sure. But still, if you think of this as a pandemic winner, and we're coming out of it, as they're saying, we have a lot more choices. You can go into a store, for example. So that's sort of a confluence of some bad events for Etsy. I mean, they did a great job during the pandemic, but I get why it's down. It should be down.
I mean, buyers only making one purchase a year doesn't sound like
crazy.
And the year was 2021?
Yeah, right. Not a very robust kind of business here. Let's move on to Booking Holdings here. TripAdvisor earnings also out after the bell. Booking reporting adjusted earnings of $3.90 a share despite a slight earnings miss for TripAdvisor. Both stocks are moving higher ahead of what is expected to be a busy summer travel season. Let's get to Seema Modi with more from the report. Seema.
Hey, Melissa, a record $27 billion in first quarter gross bookings. That is a jump of 129% compared to the prior year. Booking CEO Glenn Fogel says it's the highest quarterly amount in the company's history, citing an uptick in international flight searches on Kayak and the largest sequential increase in alternative accommodations in the first quarter. That's a business that competes with Airbnb and Expedia's Vrbo. Now, despite the threat of inflation, executives say summer gross bookings are tracking 50% higher than 2019. Those comments from executives sending shares higher by as much as 12% here in after hours. But let's turn to TripAdvisor. The company is seeing a 229% increase in experiences and dining in the first quarter year over year. Longtime CEO Steve Coffer, he's stepping down. The board appointing former Trade Desk executive Matt Goldberg as the new CEO. Stock is up 6% here in after hours. Melissa.
Seema, thank you. Seema Modi. So no macrame pot holders or shirts, Bonawyn, but they are going on trips, the consumer.
Yeah, I'm surprised BK doesn't have any more for his Dutch ovens. But, I know that these are the perceived areas of strength. We've got the travel sector or these pockets within the travel sector. We've got healthcare and we've got energy. Those are areas of perceived strength. But I begin to wonder, are we reiterating the playbook of demand pull forward that we saw in a lot of the other stay-at-home names, right? You've seen this across the board. You take a look at Uber and Lyft, and definitely there's bifurcation there in terms of like the dynamics of their customers. But I begin to wonder, is this getting a little long in the tooth?
Yeah, Monday on the desk, we were talking about Expedia's earnings, and we were like, it's trading up a few percent. It's pretty decent results, pretty decent guidance, really good commentary. It kind of meshed pretty well with what we heard of United a couple weeks earlier, whatever. And then I looked Tuesday morning, the stock was down 15% in a straight line. And so it really goes to show you just as far as sentiment right now. Look at how the glass has turned from, half empty to half full in, 48 hours. I'll just say this. I mean, this is a company, again, I said the same thing about Expedia. Pretty defensible, as far as business model, 72% gross margins, growing sales 20% a year for the next few years. And again, I just think that these are the sorts of companies you want to be in for reopening. Who knows when that happens? And here's just the last point. You got to look at people like Etsy and kind of think about why they're saying what they're saying about the consumer. The consumer is not as strong. We know what happened over the last 2 years, why consumers' balance sheets were in great spots now. And the inflation picture is really going to kind of play, I think, a big role in what we think of the consumer over the next 3 to 6 months or so. So to me, I suspect that we see consumer drop off in the next few months or so. But if you're buying a ticket, you're buying it ahead of time. If you're you're booking a VRBO or an alternative thing, you're buying ahead of time, and I don't think that's a great indicator for that.
Yeah, and I think, he said buying. Take a look at the airlines, right? So we all know that they have actually been doing quite well, but some of them are now starting to say we're going to reduce capacity, number one, because there's a pilot shortage, but then it goes back to the energy play, right? What's it going to cost to run these planes again? And as prices creep up and people say, well, I did my blowout trip to Hawaii, I don't know if I want to do another one to Peoria, then I think things start to die down.
All right, coming up, we're charting some cheddar. Could a strong dollar hit a key area of the market fighting inflation? The chart master will join us to lay it out. Plus, more on the big Fed move from today. A stock shrugging off a half-point hike as the central bank tries to fight inflation. More on that next. You're watching Fast Money live from the Nasdaq market site in Times Square. Back right after this.
How many market crashes do I have to live through? Why wasn't I listening to VectorVest?
Good question. Back on November 5th, VectorVest signaled trouble brewing. And on November 12th. Again, November 19th. Followed by a confirmed down call on November 22nd. That signal alone could have saved your portfolio thousands. Try it risk-free, 30 days under $10 at VectorVest.com. VectorVest, a simpler way to know when to sell.
You'll always remember buying your first car. But the things that last a lifetime, like happiness, love, and confidence, you can't buy those, but you can invest in them. At T. Rowe Price, our strategic investing approach can help you build the future you imagine.
At Empower, we believe in opening doors. Let us help move you towards financial freedom for all of life's moments. We've been helping over 17 million customers create the future they want, and we're ready to open some doors for you.
Bonnie Boone, I'm calling you out.
Everybody be cool, all right? With Ring Central, we can pull Bonnie up on phone, message, or video all in the same app.
Oh. Hey, Bonnie. I didn't see you there.
Ring Central. Allergy sufferers. Bedtime means it's time to take Zysol. Zysol relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin, and on first dose, provides the same relief as Zyrtec in a pill nearly half the size. Be wise all. Take Zysol at night.
It's the hottest sellers market in years. If you're thinking of selling your home, your first step is to find out how much it's worth today. But where do you start? Introducing HomeLight, the essential real estate platform for selling your home. HomeLight will give you a free home valuation and match you with top local real estate agents in your neighborhood who will provide you a complimentary market analysis. HomeLight uses the same tools banks and lenders use, and HomeLight is backed by the nation's best real estate experts. Find out how much your home's worth for free at HomeLight.com.
Crypto world, the headlines rocking the crypto markets.
An internet shutdown just hit the second largest mining hub.
The day's movers and tech changing the industry. Scan to watch or visit cnbc.com/crypto world. Sponsored by Crypto.com.
Recapping our top story, the Fed says so long 75 and Wall Street says hello rally. The S&P jumped 3%, its best one-day gain since May of 2020. The Dow surged more than 900 points, its best day since November 2020. And the Nasdaq roared higher by 3.2%. But our next guest isn't cheering the Fed's moves today. He says the chair is too optimistic and thinks Powell is just winging it. Peter Bookvar is the Chief Investment Officer at Bleakley Advisory Group and a CNBC contributor. Peter, great to have you with us. I'm getting a lot of tweets, not that I care what Twitter says necessarily, but that we're so negative. So I guess, welcome to the party here. Why do you think Powell is just winging it? I mean, in reality, isn't that what he should do? Because we don't really know what will unfold. So there is going to be a certain degree of, quote unquote, winging it.
Oh, I agree. I mean, they're going to raise rates. They're going to shrink the balance sheet and see what happens. Part of the winging it was, he was asked the question, why aren't you starting QT now instead of waiting till June 1st? And he said, well, we just decided to pick that day. Like there was no science behind that. Then he was asked, well, what's going to be the impact of QT? Well, we just really don't know. Well, if you don't know the impact of QT, then why did we have QE? How would you know the impact of that? So there's a lot of just, throw stuff against the wall and see what happens. And I think they did that on the easing side, and they're going to do that on the tightening side.
Hey, Peter, it's BK. So, he talked a little bit about the path to a soft-ish landing. Where do you stand on that? Because it seems to me that that's a pretty narrow needle that he needs to thread.
Well, this is going to be the most aggressive tightening cycle in 40-plus years between the rate hikes and the shrinking of the balance sheet. And considering how dependent economic activity is to cheap money, how dependent markets have been to cheap money, I don't see how it's possible to achieve a soft landing.
Peter, it's Karen. I think this is a question I asked you maybe last time you were on. If you were magically the Fed chair today, what would your policy be?
Well, I would do what he's doing now. The difference between myself and Jay Powell is prior to this in the terms of the amount of easing and for how long they did it. But I think he's on the path that he should be. And then we just get to see what happens. And we all debate about what's priced into the markets, what's not. What's not priced in, I believe, yet in full, is the economic impact of all this. The bond market's priced in pretty much all the rate hikes we're going to get and then some. But I haven't seen earnings estimates for this year change at all. And if in fact, they've gone up. So if they're low odds of a soft landing, which means that we're going to have a recession, well, that means that earnings numbers are going to have to come down. And the economic impact of not just what the Fed does, but what the ECB is going to do, the BOE, the Bank of Canada, a global synchronized monetary tightening, I don't think the economic impact of all this has been fully priced into markets.
You know, Peter, we were just talking about, the notion that Powell has control over the demand side and not the supply side. And we're seeing commodities go to these levels, even with China's most populous cities effectively locked down in some way, shape or form. How do you see this playing out? I mean, let's say by, fall or the end of the year, where do you think we are in terms of the impact on the consumer here in the U.S. and what we're seeing in terms of inflationary pressures? Do you think he gets at least some of the inflation out of the system?
Well, I do believe that the rate of change in inflation has peaked out here. And it's just a question of how much do we fall. But there's a lot of price increases in the pipeline. I listen to a lot of conference calls, and companies are still going to take this year and into next year to recapture lost profit margin. And then it gets to the question is, at what point does the consumer blink in the face of these rising prices? And on the low-end consumer, they're already beginning to blink. And whether Etsy's a tip-off, where I've seen some others. The question is when do we get to see that breakage in other parts of the income strata, call it? And I think we're getting close to that point. And that's when the consumer starts to say, you know what, I'm just going to wait. I don't need to do this right now. I'm just going to wait to see if things cool down in terms of pricing. And I think we're now running up to that line that we're about to cross over, which then has obvious economic implications. And then you start to see an eventual decline in inflation. But it's the inflation that eventually breaks the inflation.
Right. Peter, always great to get your take. Thank you. Peter Boockvar. In Peter's note earlier today, before the Fed decision came out, he made the point of, the U.S. consumer being so used to discounts. Remember, once upon a time, everybody waited till like November, even past Black Friday, till like a week before Christmas to do all their shopping because prices would come down. And here we are in the situation where it's assumed that consumers are going to pay up price increases after price increase on toilet paper, on dog food, on Pampers.
On gas, on food. I mean, the list goes on and on. And listen, I think one of the most important things Peter said, and he does really thoughtful work, and he does listen to dozens and dozens of earnings calls. And I think that's where you get a lot of the good stuff. Earnings estimates have not come down for the S&P 500. We had GDP in Q1 that contracted, okay? We have all of these inflationary pressures. Even if they come out, even if it peaked in March, they're still staying high. So you're telling me that S&P earnings are going to be up 8, 9, 10% possibly? No way. I mean, I suspect they come in mid-single digits, maybe low single digits, and that's why the S&P 500 has not bottomed out. The high valuation stuff, we're seeing that compression right now in stuff that's down 50, 60, 70%. We have not seen it in the mega cap tech names, and I think that's the next shoe to drop this summer.
So one of the things that we've debated on the show is the Fed's willingness for there to be price destruction or income destruction, wealth destruction within public markets and private markets. One thing that I think is flying under the radar is destruction within the housing sector and how that ties to the consumer. I don't think you really are able to tighten down spending in a way when people are still able to access additional credit in their homes. Now, those rates have continued to rise, but I think that's another shoe to drop that I'd be very interested to see how the Fed is going to handle that.
Yeah. The desk is decidedly negative tonight. I mentioned that.
I wouldn't say I'm all that negative. I'm skeptical of this 900-point rally that Powell took 75 basis points off the table. This market can rally. If the equity investors want to decide that he was dovish, this thing can rally. Earnings estimates haven't come down. It can go for it.
I'm just going to believe it.
I might not believe it, but I'll trade it.
Yeah. Well, thanks, Little Miss Sunshine. I had a couple things, actually, that I thought were positive. Actually, in the housing front, there were two companies that reported today. Residio, which is a spin-off from Honeywell, and another one, BXC, which is, I think, Blue Links. It's also in the housing-related business. Both giant earnings and big forecasts. And why would you need to put out a big forecast in this market? They must feel very confident. The other thing is the S&P, we always talk about this all the time, it's not a monolithic one stock thing. You've had the IGV kind of names, the super high-tech software ones get crushed and probably have more room down. And then you have some things like a CVS today at 11 times earnings. There's a lot of value.
But it is kind of monolithic because there's like 5 names that make up 25% of the weight of an index of 500 stocks. And the NASDAQ 100, those 5 names make up about 45%. So it is monolithic. And I actually think, I've said this before, I think the Fed buys Apple all the time. Apple was trading up 1% today. It really was, keeping the S&P and the NASDAQ not looking nasty when I looked at dozens of stocks that were down 5, 7, 10% or so. So I think there's some funny business going on there. It is a monolith.
You think there's a plunge protection team?
I do. I think that's the easiest
Apple.
trade. Berkshire Hathaway is all Apple. Why couldn't the Fed's balance sheet be Apple?
All right, coming up. Dollar detriment. Could the strength of the U.S. dollar spell trouble for one key area of the market? Carter Worth is hitting the charts to lay it out. Plus, ride-sharing stocks slamming the brakes after some rough results. Is it time to completely drive away from this trade? The details ahead. Fast Money's back in 2.
Get your trades to go with the Fast Money Podcast. Catch us anytime, anywhere. Follow today on your favorite podcasting app. We're back right after this.
Some bonds last a lifetime. Some bonds inspire confidence. And some you grow to rely on. These are the bonds worth investing in. For over 50 years, PIMCO has reinvented fixed income to create opportunities for investors in every market environment. So no matter what happens, you can build the bonds that mean the most to you. PIMCO, a global leader in active fixed income.
At Empower, we believe in opening doors. Let us help move you towards financial freedom for all of life's moments. We've been helping over 17 million customers create the future they want, and we're ready to open some doors for you.
Pack Rat makes moving and storage simple and safe. We clean and sanitize before we deliver your container. You pack at your own pace. Then we pick up and move or store. All done contact-free. Visit 1-800-PackRat.com today.
Tonight, new surveillance video released in the manhunt for the murder suspect on the loose in Alabama. Plus, Amber Heard takes the stand in Johnny Depp's defamation trial.
The facts, the truth, the news with Shepard Smith, 7 and midnight Eastern, CNBC.
Our electricity bill is double what it usually is. Sis, I can't front that.
Good thing I've got Chime. No. They spot eligible members up to $200 on debit card purchases and cash withdrawals with no overdraft fees.
You lucky Chime's got your back. Is this mine?
Remember when you used to get stickers for doing something good? What if you got Bitcoin? With Upgrade Card, you can. You can get 1.5% back in Bitcoin on payments. Upgrade rolls all your monthly purchases into one easy installment loan. Get started at upgrade.com.
Let freedom in. Freedom to work, freedom to play, freedom to simply be. Need a space to call your own? Four Seasons has got you covered no matter your style or budget. To ensure your well-being, our teams are temperature checked, wear gloves and masks, and maintain social distancing protocol. In support of hard-working Americans, take advantage of easy payments, and for a limited time only, call now and save up to 40%. With products that are American-made and American-inspired, it's time to let freedom in.
Welcome back to Fast Money. The dollar falling today after the Fed's big rate hike, but the chartmaster says its overall continued strength could be a headwind still for stocks. He's sounding the alarm on one sector in particular. Let's go to the chartmaster, Carter Worth of Worth Charting. Carter, what do you see?
Sure, all sorts of things. But first, something for everybody today, right? I mean, think about it. Friday, the Dow was down 939 points, and today it's up 932. Here we are, basically unched from last Thursday. Bears, bulls, but still the fight goes on. Staples, consumer staples, let's examine the circumstance in relation to the dollar. First slide. We know that certain companies do a great percentage of their business overseas. So you can see the names here, but these are big names, and all of them have 50% plus of their sales outside the U.S. And so a strong dollar hurts those type of companies versus United Health, a top 15 company, has 0% of its sales outside the U.S. for reasons that are obvious. The next slide, just as a summary, basically we know the dollar is at a 20-year high, and we know in principle a strong dollar is a headwind for U.S. companies, U.S. stocks, and basically 30% of the S&P 500 sales come from overseas. But then it gets down to which sector maybe is the most sort of impaired by that, and it's consumer staples. And so let's look at a few charts, a few tables. First, what you see here is the EPS growth correlation year over year, sector versus the dollar. And you see it right there on the bottom. Staples have the biggest problem, if you will, when the dollar is strong. And so what I would say is there's a conundrum, and you can see it just as written in this slide. Staples are the single most defensive sector, and yet staples are the single most exposed to a strong dollar. And so if one wants to be defensive, this is an area, and yet the strong dollar is a problem. So look at this ratio chart. This is very telling. This is simply taking staples divided by the S&P, or in this case, the Spider's XLP relative to the SPY. And I've used the 150-day moving average. And this is since 2009. There have been 3 other instances when the staples were this extended over trend. And each and every time, they've started to underperform. And I think that's the risk here. And staples would be a favorite underweight for us. And then finally, a chart of the U.S. dollar. We know that when you quickly approach a former high, while it looks like it's going to be a breakout, that's not the sequence. More often than not, before exceeding the high, you have to contend with it. And so we got literally to the penny to the January 2017 high, and we started backing away. And there was an accelerant today, right? 2-year yields dropping, dollar dropping post-Fed. And so the strong dollar is a problem for staples. We don't like them. We want to be underweight. And we do think that the dollar should pull back here because it's way overdone.
All right. Carter, thank you. Carter Braxton Worth of Worth Charting. Carter was highlighting the relative outperformance, to the S&P 500 for the valuations too, relatively high compared to the S&P. When you take a look at Procter, Kimberly-Clark, Coca-Cola, they're all in the 20s, 26 or so, 28. Procter & Gamble is in the 30s.
Because it's been the place to hide, right? Yeah. You get decently high dividends. You look at it as a defensive type of sector. So if you are going to have a soft landing or a recession or something like that, you probably want to be in these names. If you still want to play that game, though, you can stick with the domestic one. So, one that I am long that I've mentioned before is Altria MO, all U.S. based. They don't necessarily have to worry about the stronger dollar. So that's one way to play it. The other thing I would say is, another part of the rally today, weaker dollar, people say, well, maybe I don't have to worry about the dollar anymore. And so that boosts the rally. So that could go. Thing I would say is, another part of the rally today, weaker dollar, people say, well, maybe I don't have to worry about the dollar anymore. And so that boosts the rally. So that could go.
Coming up, the crypto climb, Bitcoin jumping today after a rough year for the space. So what is next for the trade? Our Bitcoin baller here is here to break it down. Plus, 0 stars for the ride-sharing trade. Uber and Lyft hitting the skids as earnings disappoint. So are the stocks worth hailing, or is it time to drive away? Stay tuned.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market.
Life is for living. Let's partner for all of it.
I'm so glad we did this.
Edward Jones.
I have a number of money managers that advise me on investment strategies, portfolio construction, and asset classes. But sometimes I just want to do a trade by myself. So I went to the App Store and downloaded IBKR Global Trader. No conversations, no messages, no friction, all done in 20 seconds. They have 90 trading venues, 27 currencies, and even crypto. So give it a try. You're going to like the way it works.
My hair started thinning in my early 20s. I'm genetically predisposed, so we created Nutrafol. Nutrafol is the #1 dermatologist recommended hair growth supplement. It's never too late to improve your hair health. Get started at Nutrafol.com/man.
Allergy sufferers. Bedtime means it's time to take Zysol. Zysol relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin, and on first dose, provides the same relief as Zyrtec in a pill nearly half the size. Be wise all. Take Zysol at night.
Join the CNBC Fantasy Stock Challenge and get 100K in virtual bucks to play the game. Create your virtual portfolio, track your progress, trade to win, and play for free. Go to cnbc.com/stockdraftchallenge now.
Welcome back to Fast Money. Check out Lyft and Uber both getting hammered today on the back of two very disappointing sets of results. Uber dropping 4% more than after reporting a loss of $5.9 billion before the bell, while Lyft had its worst day ever, falling nearly 30%. But the options traders now betting things can't get any worse. Mike Coe joins us now to break down a wild day of action in these names. Mike.
You know, typically when you see these kinds of huge moves, you get huge options volumes. That was definitely the case today. Lyft traded 12 times the average daily call volume. Uber traded well over 4 times the average daily call volume. In Lyft, the activity we're seeing was mostly short-dated, a lot of stuff expiring at the end of this week. One of the trades that caught my eye was a purchase of the May 13th weekly 23-strike calls. Those were extremely active, and that included some institutional purchases, including one of just under 5,200 contracts for about 77 cents a contract. Buyer obviously betting that Lyft could rebound by the end of next week, and that's modestly out of the money considering where the stock is now. In Uber, the situation was a little bit different. So here, the trade that caught my eye was a purchase of 2,500 of the June 40-50 call spreads. Those traded for $1.23. Ultimately, 10,000 of those traded by the end of the day. That is well out of the money. In fact, Uber would need to rise at least 50% for that trader just to break even, and the higher strike call that they sold is 80% out of the money. It is possible that a trade like that could be used as a partial hedge against a short position, but either way, it indicates some assessment that there's a possibility that the stock somehow rebounds. That would be quite a move.
All right, Mike, thanks. Mike Coe. And speaking of Uber, do not miss the CEO who will be on Squawk Box tomorrow, 8:30 a.m. Eastern Time, right here on CNBC. Bono in, higher or lower on Uber and or Lyft?
Oof, that's tough. Lower.
They go lower.
Yeah, I mean, I think that option trade is purely them saying things are so bad that they've got to be good in the interim. But No, don't fight.
All right, so here's the lift. It's down 30%. It's down 80%. Who cares how much it's down? Well, here's the thing. I like these guys, and I like their business model. I prefer them to Uber, and we like the domestic focus and all the other things. Here's the thing. It's got a $6.3 billion enterprise value right now. On a multiple of sales, it's below 2. It's probably almost there. They have a lot of cash. Karen was just saying 2.3 and a $7 billion market cap. So probably goes a little lower in the near term. But this is a name, I think, when we get back to, we're going to see some strategic M&A when this whole thing meshes out. Maybe this is the sort of name that gets kind of wrapped up in that.
Lyft gets bought?
Yeah. A lot of data there, Mel.
Just for the data?
A lot of data there.
But who would buy them?
Because aren't they all going to autonomy? Isn't that going to be a thing?
Robo-taxis.
I don't know. I mean, listen,
I'm just saying,
but they've also been doing this for 10 years now, and they have a lot of data about this stuff. So, I mean, to me, it just seems like a very cheap asset and a cheap brand that would be hard to replicate from there.
All right, for more options action, be sure to tune into the full show. That'll be Friday, 5:30 p.m. Eastern Time. Coming up, Bitcoin bounce, a cryptocurrency nearing the $40,000 mark once again. Brian Kelly is here to break down the crypto trade next. Fast Money's back in 2.
Options Action is sponsored by Thinkorswim by TD Ameritrade. Options Action is sponsored by Thinkorswim by TD Ameritrade.
We believe income investing can benefit both investors and communities. For over 120 years, our income-focused strategies have been building roads and bridges, hospitals and schools, and helping small and large businesses to grow. Investing to make an enduring impact on our world.
Future. It's impossible to see. And when it's finally here, it might not be what you'd expect. It might just be better. Introducing Luxury Electric. Introducing Lucid Air.
You know, it doesn't seem to matter what most companies do. Their stocks are hostage to Treasury. It's handcuffed to the 10-year. A bond, a 10-year Treasury. And it's determining everything. Rich people, of course, don't want you to make money. Watch or listen live on the CNBC app.
When you've got a health concern, there's searching the internet and there's science. There's surprise bills and there's knowing what you're going to pay. There's a lab test on your own schedule from home. There's physician-reviewed results you can understand. Everlywell. Demand better for your body.
I recently purchased the Everlywell food sensitivity test. Turns out I am really sensitive to dairy. So since eliminating dairy from my diet, I feel so much better. I definitely recommend it.
This is what credit card debt feels like. And this is Tally, an app that can get you out of debt up to twice as fast. No, you don't have to do anything. Tally figures out which cards to pay off, when, and for how much. It can even lower your interest rate, all while you sleep. So you sleep easier. High five. Get out of credit card debt up to twice as fast with Tally.
Welcome back. Here's a sneak peek at the Cramer Cam. Jim is talking with the CEO of Clorox. You can catch the full exclusive interview at the top of the hour on Mad Money. And do not forget, you can have Cramer delivered right to your inbox at the CNBC Investing Club. Sign up now at cnbc.com/join the club or by using the QR code on your screen. All right, check out Bitcoin bouncing back today. The crypto climbing nearly 6% as it tries to shake off its losses this year. So far in 2022, Bitcoin is down 13%. The move bringing other coins along for the ride. Ether, Solana, even Dogecoin is in the green today. So barometer of risk, everything rallied. So did Bitcoin.
Yeah. So what's interesting is the correlation between Bitcoin and the NASDAQ NASDAQ 100 has been almost 70%, at least the 30-day rolling correlation. So it's basically the NASDAQ. But what we saw today was something slightly different. When the NASDAQ was tanking earlier in the morning and it was down 1.5% or so, Bitcoin was up. And that is the first time, maybe the last couple of days, we started to see some divergence. You're seeing a slight divergence there. But remember, I think Bitcoin has been and will continue to be this hedge against money printing. And so everybody out there is saying, okay, the Fed's going to raise rates. At some point in time, they're going to have to turn that printer back on. And I think today people are trying to gauge when that is going to come.
What's your outlook on Ethereum? I mean, you read almost every day about an NFT going back on the market for much less than it was bought for.
Right.
And so you got to wonder how about the coins, backing it?
Well, I mean, so the thing about Ethereum, the big thing there is going to be the merge, which is supposedly later this year. It might have been this summer, but it got pushed back. Anytime something comes with Ethereum, you want to say it's going to take a little bit longer. That is the big deal with Ethereum. Everything is being built on it. Yeah, the NFTs are coming down. I've been skeptical of the NFTs for exactly what Elon Musk said today. They seem awful fungible. You can copy and paste them and make them your avatar, and you didn't pay for them.
They're like JPEGs.
Yes.
Right? I mean, we just a lot of skeptics have said.
To be clear, I think they're going to be huge, but not in the form they are today.
Yeah, Mel, you're missing it. It's about community.
We did that land grab sale went up the other day. But I got a question for BK, though. So part of the Bitcoin story was the adoption of institutional investors needing to have exposure there. What is that still the case? Has that played out?
No. I mean, listen, it's absolutely still the case, because if you look at the institutions have barely come in, right? You have barely any pension funds, barely any major institutions. It's mostly family offices, small institutions. However, you also are getting these macro funds in there, which are trading it as a proxy for Fed liquidity. And so that's the dynamic you have right now. But the long-term trajectory for Bitcoin, to me, is still wildly bullish.
All right. Up next, we have your final trade.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs. And having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
Verizon is going ultra. With 5G ultra wideband in many more cities, you get up to 10 times the speed at no extra cost. Plus, 6 premium entertainment subscriptions included, like Disney Plus, music, gaming, and more.
Delightful.
Saving you over $350 a year. And for a limited time, get a 5G phone on us. No trade-in required.
Amazing.
This is the offer you just can't miss. Verizon is going ultra, so you can get more.
Gosh, wow. Who am I?
Wow, is that really me?
Under eye bags and wrinkles are so frustrating. I came across Plexiderm and I was so excited. We have a model. All he's doing is taking a small amount. It's so powerful. That's all it takes. Tightens the skin and smooths it out. Gently rub it underneath your eyes, on your fine lines and wrinkles, and it visibly disappears in as little as 10 minutes.
You know, I felt something happening, but I had no idea. Like, I have so many dark circles. I have the puffiness. I have the lines. Like, it's amazing.
Holy words I can't say on camera. I could feel it just lifting my skin. It was amazing. It feels good. It feels great. Looks even better.
At our $14.95 price this Mother's Day, it's the best time to try Plexiderm and see it work for yourself after your first application. Your solution is at plexidermtrial.com or call the number on your screen.
Clorox cleaned up this quarter, and I'm learning what was behind the strength of the CEO. Then Revolve plummeted today after earnings, and I'm trying the fashion retailer on for size with the company's top brass. Plus my exclusive with GXO. Watch or listen live on the CNBC app.
Let's take a check on shares of AMD. This is one that we addressed in the after hours yesterday when they posted earnings better than expected. It was an interesting intraday trade, and I guess it really reflected exactly what happened with the broader markets when Fed Powell uttered those words. The 75 basis points is not being considered at this time, Dan.
Yeah, I mean, this is a group that I heard you guys last night. I watched the show when I'm not on. You guys were really good. You surrounded the trade here. I mean, listen, you know, we saw a bad report out of Intel. We saw good results out of Qualcomm, out of AMD, out of NXP. There's been some good results here, and we like to track this sector because we think it's fairly cyclical. We know there's some weird supply-demand dynamics here, but this is a cheap stock. Lisa Su, CEO, had a great interview on the air this morning. So, yeah, it got on its horse. It probably has some more room to run here.
All right, final trade time. Bonawyn, what do you say?
Berkshire, listen, despite their Apple holdings, I think this company has shown an adeptness to be able to pounce and make acquisitions in turbulent markets. I'm sticking with them.
You got the plunge protection put, right? Karen.
I'm intrigued by Dan's lift idea. So this is a 3-day rule one for sure, but I think it's worth looking at. It's $6-7 billion enterprise value. Very interesting.
BK.
You know, if you want to play the rise in energy, ExxonMobil, good dividend, and they get good spreads.
Dan.
Yeah, I like Carter's charting of the XLP. That's the consumer staples ETF. I'd be a seller of that, too.
All right, thanks for watching Fast. See you back here tomorrow at 5 for more Fast. Meantime, Mad Money with Jim Cramer starts right now.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Prepare for the worst. Expect the worst. Hey, that's been the market's attitude for weeks now, as the Fed methodically continues raising interest rates to cool down the economy. I know that sounds crazy on the day where the averages ultimately spiked into the close. Dow surging 932 points, 930 points. S&P was soaring 2.99%. And get this, NASDAQ rocking 3.19%. But there's always a sigh of relief when the Fed does exactly what we expect them to do, even if it's the largest rate hike in 22 years. And it can be even more than a sigh of relief. It could be outright buying when something unexpectedly positive occurs. And we got that today when our own Steve Leisman asked if the Fed is thinking of going 75 basis points at the next meeting. Talk about prepare for the worst, expect the worst. Then, with the market teetering and readying for itself for another plunge, and you all saw it about to happen, Jay Powell took the 75 basis points off the table. We were off to the races, including those who know it isn't paid to be short at every turn this year. It was amazing. It really was. And I was watching, and I was thinking, all right, it's going to go down, going to go down. What can save it? What's going to save it? The shorts are coming in, the sell, and the futures got, boom, close. Case closed. No 75. Me. Well, after a day like today is put behind us, and a 75 basis point hike is no longer ahead of us, I get to go back to earnings season mode, even if we've already got this non-farm payroll report being gamed about from Friday. And from my observations, until the 75 basis point potential hike was removed from the game plan, I can tell that we weren't getting the kind of pin action that I hope for when I go bowling, as I did just last week. What does that mean? Well, you can't get a 207 or even a 310 in this outfit, even if, like me, you have your own ball and shoes. Or put it together another way, before the 75 basis points were taken off the table, you could go bowling, hit the AMD pin, and it would just fall like a dud without hitting the NVIDIA pin, as if the two in the same business didn't share the same joy of strong orders as they do. But we found out that Jay would be measured, something I've been telling you all along. Then NVIDIA pops almost 15 out of nowhere. Boom! Right on the 75 basis. You can look at the Q. Look at the time Q. It's incredible. Just when that happened, suddenly NVIDIA's worth 15 more points. It's nuts. But it's how much the market cares about rates versus facts. And it's hard to believe because it's just so stupid. One thing is sure, though. By 9:30 tomorrow, we will forget what Powell said entirely about the next meeting, and we'll start focusing instead on some other thing that is equally as irrelevant. Why is this? Simple. Because people are unsure what a 50 basis point rate hike will actually do to the economy. So starting tomorrow, we'll once again prepare for the worst and expect the worst. And people talk about how people will buy fewer homes or fewer cars or whatever, because that's what people do. And as long as money managers are unsure, which they are, they'll keep selling things that they shouldn't. Today's late afternoon rally notwithstanding, Wall Street's bias here remains very negative. Now, I've seen this kind of moment many times in my career, so I know exactly what's going on through the heads of the big trigger pullers. So I am going to just tell you, I am going to give you a deep dive into their cranial structure and tell you not how stupid they are, but how they think. If you think they're stupid, good. All right, first, there are people who feel that this whole situation has gotten out of Jay Powell's hands. They watched him talk about how inflation should flatten out today, and they didn't even want to bother to listen. See, because they've made up their minds that Powell is out of touch, that he's lost it, that he is a stooge, a lackey. Like Paul Tudor Jones, a great guy, billionaire philanthropist, who said yesterday that the lackey stooge Fed chief should resign. These people are sellers of everything. After the Fed meeting, they were mostly grateful. So many others were willing to take Powell seriously, give me a chance to be able to ring the register at higher levels. These guys see Powell as the ultimate lightweight, who's so far behind the curve that he's made himself irrelevant. Because he's so late, they think we're in for a repeat of the late 70s. They keep talking about early 80s. I was alive. I traded then. It's very different when the Fed had to take rates to the low teens and wreck the economy, get inflation under control. I bet some of these billionaires who think Powell is a total stooge and lackey have some gigantic short positions here, although they won't want to talk about them. So camp number one is Jay Powell's a stooge. Okay, then there's the second group. They think Powell's irrelevant for a different reason. Between the lockdowns in China and the war in Ukraine, the global supply chain is so messed up that there's not much the Fed can do to get inflation under control. They don't blame Powell. They see this as a total force majeure situation. Now, these guys are wild sellers. Now, I'm going to let you into something, but I'm going to whisper because I don't want everybody to know. I just want you and me to know, okay? Don't tell anybody else. These are people who fear that Russia is going to drop a tactical nuke on Kyiv, okay? These are people who fear that China is going to invade Taiwan. These are people who think that our country's weak and the Russians are strong and China's strong. They'll never say this stuff out loud because it makes them sound like they're crazy. But remember, this is just between you and me. But this camp is secretly very afraid. They wake up afraid. They go to bed afraid. They think millions are about to die from the madman in the Kremlin unless he's killed. World War III is here. They also don't care what Jay Powell says because Jay's not talking about how everybody's going to die. Now, look, other than Billy and the Predator, that everybody's going to die thing doesn't wash with me. Can we have all those horrible things? Oh, we can have every horrible thing. Anything horrible can happen. But these people are sellers because of China and Ukraine and this. They changed the numbers on me, so I have to look around. Where's my scared? All right, well, it's in here somewhere. They're scared. Better do a little cinema verite to pretend that I know where the button is, right? But they're scared. They just don't want to tell you because they're afraid to even tell you the truth. But they're scared. All right, then there's a third camp. These are the people who think that Powell must crash the economic plane because the economy's too hot. As they see it, they've got 11.5 million job openings and only 6 million job seekers. So while Powell can talk a good game about a soft landing, they just don't believe he can break inflation unless he aggressively jacks up interest rates. They wanted the 75. They wanted the 175. They want the 275. This third camp wants to sell everything into strength because when they hear kill inflation now, they take it to mean kill the economy now. They want 1,000 basis points. And they want anything. They are pulling for a crash landing. Got stooge Fed, scared to death camp, pro crash landing. All right, there you go. And then there's my camp. I don't know. How about this? I'm the constructive camp. I think the consumer's strong. Jobs are plentiful. I think Powell can raise rates reasonably with a decent time frame, do a great job. I think prices will then come down. Financing for autos get expensive. Funding for autos is expensive, so maybe we won't have a car shortage. And we'll have too many used cars, and some of the used car dealers go under. If you want to borrow money to start a business and it's reckless, you might not get the money. There'll be less buying of stocks on margin. There'll be plenty of people who leave the stock market because they need the cash. But I think leaving the market's a mistake because Powell happens to be an incredibly thoughtful, good public servant who's doing amazingly. For example, he did take off the possibility of 75 basis point triple rate hike off the table, right? In my camp, we respect his judgment and his knowledge of history. So we take the stooge off the table. In my camp, Russia backs down because we send the Ukrainians better weapons than they have, and China decides to stop starving its own people. In my camp, there can be no necessary crash landing because he doesn't want one. During this period, we have to watch how individual stocks behave. We can't trust prices because we never know when someone else might be drawn to one of these three other camps because it's the overheated economy thesis. They probably sold at the rally today. They'll sell again tomorrow because this is who they are. But if you're in my camp, you're drawn to owning stocks here because there are plenty of companies that could do well, even if the more bearish camps turn out to be right. If you think Powell's a doofus and a stooge and a lackey, and we're in for Jimmy Carter era inflation, you can buy the high-yielding oil stocks like the ones I talk about tomorrow at noon on our investing call. Members only. If you think Russia and China are driving us toward a much more dangerous world, go buy the defense stocks and cybersecurity plays. They were on sale today. Think Aero Environment, Lockheed Martin, Palo Alto Networks. If you think we're headed for a Fed-mandated recession, you buy the food and drug stocks. How about my camp? Well, if you're in my camp, you buy good companies, like an AMD, like an NVIDIA. You buy the banks. They're going to make a lot more money off you. You'll get the 310 spare. Hey, you might even hit the strike. This is what happens. Good things can and do happen. Remember, banks get instantly more profitable when the Fed raises the short rates, okay, and the banks continue to pay you pennies. Hey, by the way, you can also buy tech because tech stocks tend to do well once inflation peaks. But only profitable tech stocks, please, because the money losers aren't going to make it to the promised land. Here's the bottom line. Let the people who think Powell's in over his head, let the people who are scared to death every single morning, and let the people who think that he's a fool and has to crash land get out. And let it leave all the good stocks to us. Richard in California. Richard.
Good afternoon, Jim. I'm calling from Palm Desert. My question is Qualcomm. You had the CEO on a few months ago. I got in a little bit high. I know today was a good day for it, as the rest of the market was. But what do you feel about the future?
Cristiano Ronaldo just won the VW contract, probably the biggest in the world for electrifying. He's also got the GM deal. The stock is selling at 11 times earnings. It's going to be a big gangbuster quarter. They own 5G. He's one of the smartest people I ever met, and I think that the stock belongs at 170, not 145, which is why I bought the heck out of it for the investing club. Remember, okay? Let the people who think Powell is a stooge get out, okay? The ones who are scared to death, get out. And the ones who think it's going to crash, get out. You and me, let's stay constructive. Mad Money tonight. GXO Logistics, XPO spinoff, reported first quarter results after the bell, breaking down the numbers with the CEO. Then Revolve plummeted today. I don't think that made any sense. I'm an influencer. I'm learning more from the company's top brass, okay? And then finally, Clorox. Hey, you know what? Don't drink it, just buy it. Stick with Kramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com. On Squawk Box, the morning after, post-Fed market moves and analysis. Plus, Uber CEO on what sets their ride apart from the rest. The road ahead. Squawk Box, 6 Eastern. Watch Squawk Box anytime on demand.
Is it some magical number? Something we just achieve at the end? Or is it a feeling? A freedom to live our lives the way we intended, through the ups, the downs, all of it. This is financial security. From long-term care planning to annuities and life insurance, Lincoln helps you plan, protect, and retire. This is Lincoln Financial.
Oh my gosh. Wow. Who am I?
Wow, is that really me?
Under eye bags and wrinkles are so frustrating. I came across Plexiderm and I was so excited. We have a model. All he's doing is taking a small amount. It's so powerful. That's all it takes. Tightens the skin and smooths it out. Gently rub it underneath your eyes, on your fine lines and wrinkles, and it visibly disappears in as little as 10 minutes.
You know, I felt something happening, but I had no idea. Like, I have so many dark circles. I have the puffiness. I have the lines. Like, it's amazing.
Holy words I can't say on camera. I could feel it just lifting my skin. It was amazing. It feels good. It feels great. Looks even better.
At our $14.95 price this Mother's Day, it's the best time to try Plexiderm and see it work for yourself after your first application. Your solution is at plexidermtrial.com or call the number on your screen.
Join the CNBC Fantasy Stock Challenge and get 100K in virtual bucks to play the game. Create your virtual portfolio, track your progress, trade to win, and play for free. Go to cnbc.com/stockdraftchallenge now. Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC.
With Fundrise, the same kind of real estate investments that have powered the world's strongest portfolios for decades are now available to you. From properties generating income today to developments appreciating for tomorrow. The power of real estate investing is now in the palm of your hand. Join the community of over 150,000 investors who are building a better portfolio with Fundrise today.
Every dog is a gift, so unwrap the surprise inside with the most trusted dog DNA test. Discover all the dogs in your dog by unlocking over 350 breeds. See his family tree and reveal 210 genetic health risks. Plus, 90% of Embark dogs find a relative. Find out what kind of dog you have with a simple cheek swab. Visit EmbarkVet.com with promo code Goodwill to get the best test at a great price. Embark, goodwill to dogs.
We've heard company after company complain about higher supply chain costs. Came up today with the Fed. Yet the logistics stocks have been awful performers this year. Take GXO Logistics, the supply chain logistics outsourcing business, spun off by XPO Logistics last year. Stock started trading $60 last August, jumped to 105 mid-November. Since then, it's round trip back to the low 60s. Even as nothing's really changed with the underlying story. Tonight, GXO, it reported yet another impressive set of results. 8-cent earnings beat, 51-cent basis, on top of it, inline sales. Even better, management raised their full-year organic sales growth substantially from 11 to 15%. Now, given that the stock sells for just 22 times earnings, could this be enough for GXO to get its groove back? Let's check in with Malcolm Wilson, the CEO of GXO Logistics, to get a better read on the quarter and where his company's headed. Mr. Wilson, welcome back to Mad Money.
Thanks for having me back on the show, Jim.
Okay, so once again, Malcolm, it's driving me crazy. I think your stock had absolutely nothing to do with your business. I mean, when it went up made sense because you're solving a lot of logistics problems. When it went down, didn't make sense, but that's because the market hates stocks. I know that sounds odd, but that's what's happening. The GXO thesis of you being able to help company with their logistics is totally intact after this quarter, correct?
Absolutely, absolutely, Jim. You know, in the quarter, what we've seen is consumers are confident they're spending online. They're back in brick and mortar. That's great news. People have gone back into the shopping malls. And for GXO, we're seeing that. A stellar level of organic growth, 19%. That's a record for our business. Lots of new customer wins, contract wins, lots of new operational implementations. It's really been an outstanding quarter for us, and that's the very reason we've raised our top-line guidance for the full year.
All right, so let's say I'm a company that's got, I complain, my supply chain's bad, I can't get this to here to that, and my shipping guy says, you know what, go see GXO. What would GXO say?
We'd be delighted because that's what's happening with so many customers. You know, that trend that we've been seeing for the past few years, exactly what you've just outlined, Jim. More and more big organizations are seeking to outsource their logistics. They're seeking to take the benefit of organizations like GXO, where we bring innovation, we bring technology, we enable the workplace, we enable the warehousing space, and that's bringing efficiency, higher levels of quality, a more safer environment for the workers who are in the warehouses. It's a win-win environment. And in the end, the consumer's benefiting.
Now, do you say sometimes, look, we better do truck than train. It'd be better to do ship than truck. I mean, do you try to tell people, look, maybe you're not doing it exactly right. This is the cheapest and fastest?
Yeah, absolutely. Our customers come to us normally with a huge amount of data and knowledge and experience of their business. We take all of that information, we analyze it in great detail. We use all of the experience in our company, all our team members. We put together a solution. Invariably nowadays, that involves a lot of automation. About 30% of our warehousing stock, over 900 locations globally, are highly automated. We redesign the supply chain for them, the warehouse environment, and that's what brings all that efficiency, high level of service to their customers, and that's really important today.
All right, now Amazon came out on their conference call and said basically they had overhired, they had too much infrastructure, maybe even too many warehouses, I don't know. Is that an opportunity for now for like GX to figure out what to do with the excess?
Well, listen, warehousing space is still at a premium. You know, manufacturing development is not yet caught up with demand. So I don't think there'll be any hardship in filling up those warehousing spaces. For us, we're a big user, one of the largest real estate users of warehousing space on a global basis. And so we're consuming lots of warehousing space. We'll certainly assist.
Now, what happens when you send someone to XPO, which is your, I guess your partner, but was you guys were together in a long time? Would anyone say, you know what, all you're doing is sending me toward Brad Jacobs? That's not right. I want to get the best rate.
Listen, that's part of our DNA. We come from that heritage, so we like that company very much. You know, it's a good company. But people want to work in GXO. They see that we've created a great place for people to work. You know, it's really important when you're trying to attract the best talent, and that's the name of our business. For all of the high levels of automation that we deploy, people are still the main asset that we use in our business. So creating a great place for people to work is super important, and we work hard at doing that. We listen to all of our team members. It's a constant effort for us, and we're very pleased to do that. It helps us tremendously. Now,
I know, I'm not sure whether you can mention a specific win. I was hoping, like, I've got a razor company, whatever, but just where you basically where you get told, look, we have a direct-to-consumer business. We're not sure how to handle it. And you say, don't worry about it. GXO will take care of it?
Absolutely. And that's the hallmark of our business. That's why we're so busy as a company. You know, our sales pipelines, that's the business that we know is likely to be landing in our warehouses later in 2022 or 23 or even 24. They're at consistently record highs for 2 quarters now, over $2.5 billion of sales pipeline. That's amazing. And that's what's given us confidence of our forward trajectory. We're always pleased and delighted to help our customers. They like working with us. They're giving us more and more of their business, but excitingly, more and more organizations who've never outsourced in the past are coming to GXO and helping us to help them solve problems. And we're delighted to do that.
Well, look, as long as I keep hearing there's supply chain problems, I want to start thinking, well, wait a second. You think that there's nothing you can do? Well, why don't you just go by GXO? I want to thank you, Malcolm Wilson, CEO of GXO. The fact that the stock round trip has nothing to do with the earnings, which have just done nothing but go up. Great to see you, sir.
Thanks, Jim. Thanks for having me on the show.
Once again, people, this is what I'm saying. The stocks have divorced themselves from the companies. You hear supply chain problems. Here's the supply chain stock. Right now, you say, well, wait a second, they have nothing to do with each other. That does not last. They eventually do come together. Talking about that tomorrow on the CNBC Investing Club meeting at 12 o'clock. Mad Money's back after the break.
Has the retailer Revolve gone out of fashion on the Wall Street Fashion Show? Kramer's talking to the company after guidance sent the stock plunging. Next. Tomorrow, don't miss the next CNBC Investing Club monthly meeting. Navigating market volatility, your questions answered, and all the moves Jim is making for his charitable trust. Join today. Scan the code or go to cnbc.com/investing club meeting. On Closing Bell Overtime, Goldman's top hedge fund analyst, the risks, the rewards, and where he sees the next big money opportunities in a rising rate environment. Closing Bell Overtime, 4 Eastern. Watch or listen live on the CNBC app.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech from Fidelity.
How do you turn 400,000 pounds of hard-to-recycle material into the roof of a warehouse or big box store? Continuous is a company that transforms plastics and paper that can't usually be recycled into super high-performance roofing material. WM and Continuous are working together to give hard-to-recycle materials a second life. WM is always working for a sustainable tomorrow at WM.com/stories.
A Hall of Fame swing. Like Capital Group's new ETFs, there's so much behind it. A lifetime of experience. Honing your skills. Dealing with curveballs. And having a whole team behind you. Introducing actively managed ETFs powered by Capital Group. Can I find an ETF with a whole lot behind it? With Capital Group, I can.
When my genetic reports told me about my heart health, I was able to take action. And I got a kit from my mom, too, so she can get her own meaningful health info.
This Mother's Day, start a new health journey together with Mom with $50 off every kit.
Fur, you won't faze me. Unlike Zyrtec, Allegra won't make me drowsy.
Allegra starts working 2 times faster than Claritin. So take Allegra before allergy symptoms take over you. And for kids, try allergist-recommended non-drowsy children's Allegra.
Hey businesses, you all deserve something epic. So we're giving every business our best deals on every iPhone, including the iPhone 13 Pro with 5G. That's the one with the amazing camera. Yep, every business deserves it. Like ones that reopened. Hi, we have an appointment. And every new business that just opened.
Like aromatherapy rugs.
I'll take one in blue, please.
It's not complicated. AT&T is giving new and existing business customers our best deals on every iPhone.
Sometimes you see a stock plunging on a seemingly strong quarter, and you got to wonder what the heck is wrong with the sellers. Take Revolve Group, the online apparel retailer. It's like a digital department store. Last night, these guys reported an excellent quarter. A clean top and bottom line beat with 58% sales growth, expanding gross margins, and strong operating metrics across the board. Yet today, the stock got crushed, down nearly 15%. Why? Well, management pointed out that they've got some tough comparisons coming up, which means that the growth rate's going to slow versus the compares. To which I say, duh. I mean, that's the law of large numbers and the reality of year-over-year comparisons. In the first quarter of last year, people were still staying home to hide from the pandemic, so there was no reason to shop for nice clothes. Second quarter is when people started getting vaccinated en masse. Obviously, Revolve's growth won't look as strong by comparison. But thanks to today's monster decline and the overnight increase in the earnings estimates, the stock has become much cheaper. Could it be a buying opportunity? Let's take a closer look with Revolve Group's brain trust. Mike, Kara Nicholas, and Michael Menta. They're the co-founders / co-CEOs. Gentlemen, welcome back to Mad Money.
Thanks for having us. Excited to be here.
All right. So, Mike, let me go to you first because I am concerned that several times in the conference call, people were saying, listen, you just had an unbelievable quarter. Why would you possibly say that that 30% for the next quarter is right when the momentum you have is obviously so good? I want to get that off the table because I think that's what drove the stock down and maybe just drove it down incorrectly.
Yeah, I think so. And we had communicated to the street that comps were going to get much tougher in the second quarter and growth was going to go down on a comparative basis. But if you look at a 3-year comp perspective, we're doing fantastic. Almost all of our metrics are at all-time highs, whether it's new customer adds, whether it's our stickiness with customers in terms of orders per active customer. So we're feeling great. We think the customer's feeling great. And yeah, it's just a very tricky comparison when you're comparing to a period where people were still in a pandemic mindset in most of Q1 to a Q2 where people were getting back out again.
All right, good. And then, Michael, I want to talk about your model because I love your model. I've tried actually, my wife is doing a business that's very much like your model when it comes to Mezcal. We're looking for influencers. We're looking for people who love it, the people who talk, people who basically think that Revolve is a great thing. Not unlike my daughter, by the way. And I wanted to know whether the model still works in a post-pandemic era.
Oh, the model works incredibly well, and I know our game has evolved. I think one thing that we've seen is that influencers are broader and more important than ever. You know, we've always historically been strong with Instagram influencers, and now with the emergence of TikTok, that opens a whole new avenue for us to connect to our consumers. And, you know, by all metrics, you know, of recent with Revolve Festival, where, you know, TikTok didn't exist, you know, in a meaningful way. The last time we had a Revolve Festival, you know, leaning into that has been incredibly, you know, valuable for us to reach our consumers in really effective ways and really emotional ways and really cost-effective ways as well.
Well, I have to tell you, I want to know why we don't have one, say, in East Hampton in the summer, or why there isn't one in Miami. I mean, these are big events, and people want to go to them, but they're in the West. And the people in the East I know are just begging to go to one of your festivals.
That is something that is a definite, very much a possibility. You know, the festival was just a magical experience at the time of my life. I think everyone there had the time of their lives. It was a real special moment, especially after so many years of, you know, not having these experiences. Right. I think everyone really appreciated it like never before. So more to come for us for sure. And we'll definitely be on the East Coast in the back half of this year. You know, Mike, one of the things I was bummed out about is I have been adamant that people have to be buying stocks of companies that are profitable, even new or old, that are profitable, that have a feeling that it's important to grow but also make money. Your free cash flow is extraordinary. It's nearly 5 times in 3 years. Why do people not understand that you're not just another money-losing company in the apparel business that came public during this period?
Yeah, I mean, I think our longtime investors do understand that and are big supporters of us. And, you know, I think it's just a matter of getting the word out to more and more investors out there. You know, certainly there's some traders that are going to push the stock up, push the stock down, reacting to small trends in monthly momentum. But, you know, if you look at our track record, 20 years of profitable growth, growing nearly every single year, profits every year but 2008. I think we're very different from most of the other companies out there.
You know, these companies, Mike, that they're online, then suddenly they feel that they put stores up. And to me, what that says is they have no faith in their model. They'll tell you, no, we got to have return. We want the presence on the street. Isn't the truth that if you're doing what you're doing with these two great brands, you got a lot of other ideas, that it's an anathema to have brick and mortar?
100%. I mean, we think long-term, certainly there can be opportunity there, but we have so much going on in our core business. 58% growth in the first quarter alone, you know, record new customer adds. We doubled our increase, we nearly doubled our increase in active customers from a previous record we'd set a couple of quarters ago. So, you know, we have so much going on in the core business. There's no need to get into other avenues. And yeah, long-term it might be a possibility, but certainly not for us now.
Excellent. Now, Michael, you mentioned TikTok. I watch Reels, too. What I'm seeing done with my 13 Pro looks a lot better than what I see on my TV, a lot online. Doesn't that just make it so that the resolution and the visibility about what you have, Michael, is even stronger now than ever?
More than ever, for sure. The resolution, the quality, the app makes, you know, production of video so much easier than things of times past. And not just, you know, the quality, but also just the intimacy you have with, you know, the influencer, with the TikToker. There's just this connection that the consumer has that really, you know, communicates our message in strong ways that, you know, I don't think other channels are, you know, really enable you to do. So I think, you know, our strength in, you know, influencer marketing, our strength in production, and the strength of, you know, the emotional message we're communicating is really getting across, and it really shows in all of our incredible metrics. All right, so, Michael, if you had the ability to have the money to build a department store on Fifth Avenue or throw whatever much that costs, throw parties that equal the cost of that building, what, Michael, would have a better return on investment? Dude, you're definitely throwing those parties just because, you know, as busy and as amazing as Fifth Avenue is, you know, there's not billions of people walking down the street. And I think what we're able to do is get billions of impressions through social media. So I think that's already proven. That's already really clear, you know, it's the better way to go from our perspective.
All right, good, because that's why the stock should have been up, not down, all right? Just call it plain and simple. That's what should have happened. It didn't happen. That's Mike Karen Nicholas, and that's Michael Mente. Gentlemen, thank you for coming on. You're the new world, okay? I don't care. I know this because I have my eyes open. Others seem to have their eyes closed. We have Money's back after the break.
Clorox's products have a place in your home. But after reporting clean quarter, does its stock deserve a place in your portfolio? Kramer's checking in next. Join the CNBC Fantasy Stock Challenge and get 100K in virtual bucks to play the game. Create your virtual portfolio, track your progress, trade to win, and play for free. Go to cnbc.com/stockdraftchallenge now.
In 1 second, Sarah will get a job offer somewhere sunnier, relocating in weeks.
Weeks?
Yeah, weeks.
Gotta sell the house.
Don't worry, sell to Open Door and move on your schedule. Yes. When life's doors open, we'll handle the house.
Julius, you should really check in with your team on Ring Central.
Oh, hi, Caesar.
We were just talking about you. Yeah, you should probably get out of here. Ring Central.
Staying up half the night searching for savings on your prescriptions? Just ask your CVS pharmacist. We search for savings for you, from coupons to lower cost options. Plus, earn up to $50 extra bucks rewards each year just for filling at CVS Pharmacy.
This tiny payment thing is a giant pain. Hi, ladies. Alex from US Bank. Can she help? How about a comprehensive point of sale system that can track inventory, manage schedules, and customize orders? That's what US Bank Business Essentials is for. What about a new oven? Can US Bank help us there? We can serve loans in as fast as 12 minutes. That would be a big help. Huge. Jumbo. Ginormous. Woo!
Finding ways to make your business boom. That's what US Bank is for. We'll get there together.
That thought you had? I'm so glad you were the one in the room with me.
When companies work human, people stay. Through anything.
Hey, good job.
Because without the human, it's just work.
Movado Bold.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at
Sometimes better than feared is all you need. Exhibit A is Clorox, the consumer packaged goods powerhouse that reported a decidedly mixed quarter on Monday night and saw its beaten down stock make a tremendous and, to me, worthy comeback. Normally at this point in the business cycle, investors would be buying recession-proof stocks like Clorox hand over fist. But these days, we have a new problem. Most consumer product companies are being eaten alive by rampant cost inflation. So the stock's been an awful performer, and there wasn't much optimism going into the quarter. And there were a lot of people who were shorted. Then Clorox reported a set of numbers that, while not great or even good, were certainly enough to turn the stock around. On the one hand, their gross margins were crushed, down 760 basis points year over year, and they shaved 20 cents off their full-year earnings forecast. But on the other hand, well, the gross margins were better than they were expected in the previous quarter. Overall, Clorox delivered a 39-cent earnings beat off a 92-cent basis, but higher than expected sales, and they announced another round of price increases scheduled for July, which should help with the margin compression. The stock initially opened down a couple of bucks yesterday, but it reversed and finished up 3%. Today, it tacked on another 1.4%. I think it'd have a lot more room to run, especially if the Fed can quickly kill inflation. Don't take it from me. Let's dig deeper with Linda Rendell. She's the CEO of Clorox. To learn more about the quarter and her outlook. Ms. Rendell, welcome back to Mad Money.
Great to be here, Jim.
Well, Linda, point blank, I mean, you returned to growth. And I know a lot of people are saying, well, be careful. I like growth, and you've got organic growth, and there's no reason why your stock should have to bear the pain of a company that's shrinking. You're not anymore. Tell us about it.
Yeah, we're really encouraged, Jim, to see the continued strong demand from consumers across our portfolio, and that certainly translated into top-line results this quarter. For the first half of our fiscal year, we were lapping 27% sales growth in the year-ago period. But this quarter, As we lapped a more normalized environment, we were able to put organic growth on in 3 out of our 4 segments, the vast majority of our businesses, and 3 even grew in double digits. In addition to that, we were able to grow market share. So we feel terrific about the continued demand that consumers have for our portfolio and our opportunity to continue to grow in the future.
Now, you do ascribe some of your growth to somewhat ethereal concerns. I'm going to lay them out, and you tell me why these translate into dollars. Bedrock, company's bedrock of leading brands, purposeful and targeted and participation strategy, discipline in the DNA, and believes in the link between its impact on the world and long-term value creation for its shareholders. How does this translate, and how do we know that that's why people are buying?
Yeah, Jim, the most important thing that we manage are our brands, and they are incredibly strong with the consumer. We're in 9 out of 10 U.S. households. Our brands are deemed superior by consumers. 75% of our portfolio is deemed superior by consumers, which is a record high for us. What that means, these brands are household essentials that they need to run their everyday lives and are really great value for them. So that enables us to invest in innovation, invest in our brands, through great marketing spend, in addition to taking the pricing actions we need to recover margins over time.
All right, so the July comes around, you put through the price increases, maybe the Fed tightens a little too much. Does the consumer go and say, you know what, I don't need Glad bags or Renew Life. I can go with generic Glad bags, and I see these other guys that got some junk that's probiotic. Does that happen?
You know, we have a long history of giving that superior value to consumers, and we would expect that to continue even in a period where the consumer is under a lot of stress. We've seen that in times where we've experienced recession before. So in 2008, our categories were very resilient, and we grew the vast majority of our brands. So we feel confident in our ability to continue to attract consumers, give them that innovation and superior value they crave, and we believe they'll continue to choose us based off of our brands and brand superiority.
All right, so I love cats. Why do I get Fresh Step Outstretch?
You better get Fresh Step Outstretch because it is one of the best litters on the market, Jim. And in addition to that, it's a sustainability win. So it's a concentrated litter, and it allows a consumer and you, Jim, to change your litter box less frequently. So it's more convenient, it's better for the environment, it's a great value.
Do they like it?
The cats love it, and people love it. So that's always important. We want our cat friends to love whatever we put in front of them.
Okay, so they're finicky. I got some finicky ones. All right, now how about the disinfecting mist? Tell me about that.
Yeah, the disinfecting mist was part of our next journey of how we help people ensure that they have the environments around them that are clean and disinfected. We've had a long growth runway in our wipes business, and this is the next foray into another convenient form. It's off to a very strong start. And the wonderful part, it's not only a great disinfecting experience, it's also another sustainability win for the consumer as it's a refill model. And it's something that we can invest in for years and years to come.
And are your people who come up with sustainable ideas still getting the pay increases that we like from Clorox?
Absolutely. You know, sustainability is built into the DNA here. We've had a long belief that societal value is absolutely tied to how we deliver shareholder value. And our teammates feel incredibly passionately about the purpose of our brands and delivering on our ESG commitments as a company.
Now, do you have something that you're eyeing right now that would be another group or maybe fit into one of your categories? Because what I always like about Clorox is that you'll come on and there'll be something that I really like that's now part of the Clorox family that you'll fix up, make better. Are you always on the lookout? Could something be happening? You have the cash.
Always looking, Jim. Absolutely. You know, the first place we always want to do is invest in our base business. And we have lots of places our brands that we already own can go, and we're proving that with innovation. But we are always open to looking across the environment and seeing, are there other brands we could bring in and leverage our world-class capabilities to grow?
When I fly United, I always see that it's clean by Clorox. And I always say to myself, well, I don't need that thing that they give you when you walk into the plane. It's clean by Clorox. But I never saw it again anywhere else. I mean, I want my stadium cleaned by Clorox, okay? I go to a stadium, it's one of the dirtiest places I go. If I saw Clorox on it and I knew they actually did it, I would feel better. I like the Clorox name post-pandemic. Why aren't more companies partnering?
We've got lots of partners and lots more interest. United's a great example of a partnership where their commitment to safety and our commitment to safety really matched up, and we were able to deliver that consumer experience where you can be reassured, Jim, when you get on a United flight. I'll be reassured when I get on my flight tomorrow with United. And we're doing that in many more places where we're offering the consumer a better value, and we're offering businesses the opportunity to leverage the Clorox brand to ensure that space is clean and disinfected and that consumers know it. So that continues to go really well for us, and we see that as a strategic growth runway moving forward.
All right, so my wife carries the disinfecting wipes, the round bottle, everywhere. And before she sits down on the plane, she just wipes it down herself, even if it is United. That was a habit she did not have, obviously, before the pandemic. That's never going to change. That is her new habit. How many other people like my wife?
Lots of people like your wife who've realized that they want to control the environment around them. And so we've launched a lot of packaging opportunities that allow consumers to do that more conveniently, not just in the canister, but in flat packs and smaller packs where they can put it in their bag and purse and control the environment around them. And we continue to see people, even as we move into this endemic phase, continuing that increased cleaning and disinfecting behavior. And as a result, we have a much larger business than we did pre-pandemic.
Yeah, Deb, I mean, we had Brian Chesco last night for Airbnb. And when we go into an Airbnb, we always expect to see the wipes. Now, it's just a sign. It's the sign that they care. I wish the hotels did, but it's a sign that the people care because you've got a great brand and everybody trusts it. And I'm so glad that you had this quarter. That is the breakout quarter for organic growth. And I think there are going to be many more. Linda Rendell, CEO of Clorox, congratulations.
Thanks so much, Jim. Great to be here.
Absolutely. Okay, guys, 3%. Got the growth back. Clearly know what they're doing. Best brands. Linda Rendell, Clorox. Man, money's back after the break.
Just chill out.
Is this Chill Master Jay? The Chill Man is in the house. He's happy.
The lightning round is coming up when Mad Money returns.
Next, new surveillance video released in the manhunt for the murder suspect on the loose in Alabama. Plus, Amber Heard takes the stand in Johnny Depp's defamation trial.
The facts, the truth, the news with Shepard Smith. Next, CNBC.
Check out this Verbo. Oh, man. Look at me. Here I am. Right where I belong. It's all I've been looking for and so much more. And now I'm here. Now you're here. Nothing can go wrong 'cause I am right where I belong.
Make fitness routine with Pure Protein.
High protein, low sugar. Tastes great.
High protein, low sugar. So good.
High protein, low sugar. Birthday cake.
And for a cheesy crunch, try Pure Protein snacks.
Verizon is going ultra. With 5G ultra wideband in many more cities, you get up to 10 times the speed at no extra cost. Plus, 6 premium entertainment subscriptions included, like Disney Plus, music, gaming, and more.
Delightful.
Saving you over $350 a year. And for a limited time, get a 5G phone on us. No trade-in required.
Amazing.
This is the offer you just can't miss. Verizon is going ultra, so you can get more.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
Hi, I'm Ted Ligety, 2-time Olympic gold medalist and 5-time world champion. Buying or selling a home is a huge decision. You need to win. It means everything for you and your family. I've won a lot, and I know how important it is to work with a great team. That's why I trust HomeLight. HomeLight works with the best local real estate agents, proven winners. Over 1 million people have used HomeLight to sell their home faster and for more money. It only takes 2 minutes, and it's free. Get started for free at HomeLight.com.
Oh my gosh. Wow. Who am I? Wow, is that really me?
Under eye bags and wrinkles are so frustrating. I came across Plexiderm and I was so excited. We have a model. All he's doing is taking a small amount. It's so powerful. That's all it takes. Tightens the skin and smooths it out. Gently rub it underneath your eyes on your fine lines and wrinkles, and it visibly disappears in as little as 10 minutes.
You know, I felt something happening, but I had no idea. Like, I have so many dark circles. I have the puffiness. I have the lines. Like, it's amazing.
Holy words I can't say on camera.
I could feel it just lifting my skin. It was amazing. It feels good. It feels great. Looks even better.
At our $14.95 price this Mother's Day, it's the best time to try Plexiderm and see it work for yourself after your first application. Your solution is at plexidermtrial.com or call the number on your screen.
Lightning Round is sponsored by TD Ameritrade.
Hold it. Before we get to tonight's lightning round, I want to invite you to join me tomorrow for our monthly investing club meeting. It's going to be real informal and punchy. We'll be doing it starting at noon this time. Do not miss it. I am promising you a show of shows. We're going to dig into the wild market together, make a plan for, something that we can maybe be lasting. And now it is time. It is time for the lightning round. Of course, we're going to see let us out. And then the lightning round is over. Are you ready, Ski Dad? Time for the lightning round. It's going to Byron in Oklahoma. Byron.
Hey, Jim. I'm a long-time follower and an investment club member. Got a question for you. Bowell's Health getting ready to split. Do we buy, hold, or sell more?
You got to buy. We didn't get to be. We wanted to buy more today. We ran out of time. This thing's being put on sale. There are shorts taking it all the way down. It is quite ridiculous. I wanted to be able to buy a huge slug of it today. So that's how I feel for the trust. I'll mention that tomorrow. Jeff in Arizona. Jeff.
Booyah, Jim.
Booyah.
Been following you since your first book.
Whoa. I should write another.
Yeah, you should write another.
I think I will.
Anyway, my question is on ACN or Accenture.
They crushed that stock. The business is fantastic. They had a great quarter. I'm saying to people, buy, buy, buy. Now we're going to Jeff in Ohio. Jeff.
Yes, sir. Hi, this is Jeff in Ohio. I'm calling about the stock Cellularity, CELU.
It's right near where I live, and I got to tell you, that's one of the higher risk stocks out there. The way I would look at it is be prepared to lose everything, but otherwise make a lot of money if it works out. Let's go to Gilbert in Tennessee. Gilbert.
Booyah from Memphis, Jim.
How are you?
My stock is Great. My stock is Manulife.
I think they take on too much risk, Manulife. I'm not there for the 5%. I don't need it. Too much risk in the common stock. Let's go to Jeff in Florida. Jeff.
Hi, Jim. Hey, I own quite a bit of Marvel, and I like the stock. I want to keep buying more of it.
Well, you should. I mean, this company has two businesses, high-performance computing and 5G. We know that those are the two strongest areas. It has no PC business. It has no gaming. Marvell is a stock that we've been buying for the charitable trust, and I think you should do so, too. I want to go to Michael in South Carolina. Michael.
Hello, Jim. Thanks for taking my call.
Oh, you're welcome.
One of my favorite dividend stocks just reported record Q1 earnings, gave positive guidance for the rest of 22, has a strong balance sheet, a 4.5% dividend yield. Can Iron Mountain climb much higher from current levels?
What was stock? Iron Mountain. I like Iron Mountain. Good yield, very consistent business. Oh, and that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by TD Ameritrade. Kramer's got a latte to say about the latest commentary from Starbucks top brass. He's brewing up his take next.
Take control of your financial future with the new madmoney.cnbc.com. Kramer's exclusive CEO interviews, full episodes, analysis, even your own soundboard. Plus special access to Mad Money 101 with rules and techniques to break down the market for all investors.
The red flag that makes me drop a stock immediately is...
It's everything you need right when you need it. The new madmoney.cnbc.com.
My first options trade? Well, let's just say I did my homework. I love the courses, enjoyed the videos, studied all the strategies, but I still wanted someone to walk me through it. So I called up TD Ameritrade. Hi. That's when I met Eva. She's an options specialist who talked me through the process and helped me learn all the tools as I made my very first options trade. Eva, thank you.
Feel confident making your first options trade with a passionate trader community, personalized education, and devoted trade desk support.
TD Ameritrade, where smart investors get smarter.
Your time to invest in companies that make stuff like this hard seltzer and this jetpack is now. It's all on Start Engine, which has an investor community of over 500,000. Go to startengine.com today and start investing.
You're a one-man stitchwork master, but your staffing plan needs to go up a size. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
If you're over 50, imagine you could turn back the clock on your stiff, achy joints 10, even 20 years. Imagine you could do this without products that just temporarily hide the symptoms. Imagine no more. Instaflex Advanced. Get a complimentary sample just by texting ENJOY to 42424. Instaflex Advanced is different because it targets the root cause of joint soreness and stiffness. It doesn't just cover up symptoms. Instead, it bathes your joints in its unique combination of 5 key natural ingredients found in no other product. Key ingredients backed by 5 clinical studies. Instaflex Advanced is so powerful, you could have better knees in just 1 week. Maybe that's why it's #1 at GNC. But you can only get your complimentary sample by texting ENJOY to 42424. Plus, text now and we'll include a tube of Instaflex pain cream with its exclusive oxygenated oil for fast-acting relief from the pain of arthritis, backaches, and sore muscles, absolutely free. Text ENJOY to 42424.
Join the CNBC Fantasy Stock Challenge and get 100K in virtual bucks to play the game. Create your virtual portfolio, track your progress, trade to win, and play for free. Go to cnbc.com/stockdraftchallenge now.
Next, new surveillance video released in the manhunt for the murder suspect on the loose in Alabama. Plus, Amber Heard takes the stand in Johnny Depp's defamation trial.
The facts, the truth, the news with Shepard Smith. Next, CNBC.
Let's say you come to me a couple of days ago, ask me what I thought about Starbucks. I told you it's a pretty well-run company. I'm addicted to my triple venti cappuccino with skim wet. Real good tasting. Always have a good time. Yet on yesterday's conference call, I listened to founder and returning CEO Howard Schultz basically rebuke the previous management team by talking openly about how the company's falling behind. Hey, let me read it to you. I don't want to just, kind of just conjecture. Quote, looking ahead, try to imagine thousands of vastly more productive and efficient Starbucks stores reconfigured to align with today's customer behavior and built around technology that will deliver increased speed of service, improve labor management, and reduce unit costs and elevated partner and customer experience. End quote. Now, if you haven't been following the Starbucks saga, the previous CEO, Kevin Johnson, had been doing a pretty darn good job in most of the areas where the company operates. We just found out they had 12% same-store sales growth in the U.S., a marvelous number that happened under Johnson, not Schultz. Sure, China was awful, but they got rolling lockdowns there, so it's not like there's anything a CEO could do. More importantly, Johnson was brought in from Juniper Networks. He had been on the board of Starbucks, but he brought him from Juniper. It's a tech company, for one thing. Try to figure out how to make the stores work better, automate the stores, maximum throughput. He did it brilliantly. Granted, they've had a couple of stores unionized in recent months, which no executive ever wants to see, but that's not a Starbucks-specific problem. We've got ultra-low unemployment right now, and that's giving workers more leverage across the whole economy, hence the sudden resurgence of the labor movement. It's not just at Starbucks. Putting aside those 9 company-specific issues, I think Kevin Johnson deserved better on the conference call. He did an excellent job, and while Schultz immediately put a stop to the enormous buyback, it's something the shareholders did love. Maybe the coffee and service will get better with Schultz back at the helm, but I didn't realize it was bad in the first place. Maybe I should have been going to Dutch Bros all along. Now, I don't blame Schultz for being unhappy about the unionization drive. He's the CEO. It's oppositional relationship. The more entrenched the union gets, the less control he has over the stores. Is this happening because Kevin Johnson was out of touch with the baristas? Schultz seems to think so. I beg to differ. So many competitors lost their way during COVID, while Starbucks became one of the great winners. It's incredibly popular, particularly in the afternoon, because out of nowhere, and that's way beyond, I think, Johnson or Schultz's purview, out of nowhere, afternoon cold drinks became one of the most beloved offerings. Who could have predicted that? But who could have also thought that shift was going to be so hard? I do think Kevin should have realized that the digital payment system mistakenly discouraged tipping. That was a blind spot that could have been easily solved, like the way Uber handles tipping. You could argue that the aggressive buyback was too big for the balance sheet to handle once China went into shutdown mode, but not before then. Out of nowhere, though, we're being told that Starbucks was poorly run. I balk at that. Putting everything else aside, no one can say Kevin Johnson compromised on the taste. Their coffee held up, something I was worried about when a tech guy took the helm. To me, the truth is a little more subtle, nuanced, complicated. Howard Schultz built this business, and he's got every right to come in and try to make things better. But there's no need to be so dismissive of Johnson, who got dealt a tough hand with COVID. Suddenly, the baristas had to work different hours. While some stores were hit hard by the virus, they had to shift around all over the place. This person here, that person there. Some stores closed. I thought Johnson juggled everything pretty darn well. Today, we saw his last quarter on the job, and it was good enough to send the stock soaring nearly 10%. So maybe the guy deserves a little more credit, if not a bow. I like to say there's always a bull market somewhere. I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. The news with Shepard Smith starts now.